From DailyForex, this is Chris taking a look at the DAX. The German index has rallied slightly during the early hours on Wednesday as we continue to see a lot of noisy behavior and a pretty significant attempt at a recovery. Last week, we ended up forming a hammer, so breaking higher, of course, is a potentially bullish sign, but at this juncture, it's going to be very interesting to pay attention to the 18,000 euro level because it is a large, round, psychologically significant figure, and of course, an area that previously had been supported. Underneath, we have the 200-day EMA that the market bounced around for several sessions and then took off to the upside. In general, I think the DAX is something worth watching because Germany's heading into a recession, so we are already seeing traders try to bank on the idea of cheap money coming out of the European Central Bank. That, of course, is a situation where more liquidity has people looking for cheap assets. That being said, though, I think this is a scenario where bad news might actually end up being bad news, and I think that's part of what people are concerned about. Since the great financial crisis, we've seen most traders react to whether or not there is liquidity in the market and whether or not that should send the market higher. The break of the significant trend line, of course, is something that still keeps a bit of a lid on this market. And then, of course, we have the 50-day EMA, which is closer to the 18,200 euro level and dropping. I think the only thing we can count on is a lot of really back and forth choppy behavior. However, if we break back below the 200-day EMA, I think this is a market that comes undone. I don't think if that happens that the DAX will be alone, and quite frankly, I think it'll just be right along with other major indices doing the same thing around the world. On the other hand, if we continue to see more of a tentative bounce, sooner or later we may see an attempt to break above the overhead resistance.